Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey everybody.
Lauren, I thought we would talk about, with all this discussion in the media about the fiscal cliff, and right now it's been very quiet from the White House and Congress, and it seems like that they're in the middle of discussions and trying to settle on some type of compromise.
Right.
It brings a lot of uncertainty, and I think people are frustrated by that.
Right.
But what I wanted to talk about were things that we can proactively plan for and know about. And so no matter how the discussions end up, we can actually know that there are going to be some specific changes to the tax deductions for next year that are going to come into play no matter what happens.
Yeah, exactly.
So, and these are things that I think are positive impacts. And really what they are cost of living adjustments to certain tax deductions.
Oh, okay. Right.
So, and as you've done taxes many times, people can claim the standard deduction or the itemized deduction, whatever is higher. And so what I have noticed is, because interest rates have fallen so low, for mortgages, many people are getting at the point where they can't itemize their deduction.
Right.
Because, so
that's true.
So one of the positives with the COLA adjustment is that the standard deduction is going higher.
Right.
It's not a lot, but it is going higher. Like for an individual, it's going up about $100, and if you're married filing jointly, it's going up about $250. And so that's a sure thing that's going to happen next year. Another thing that's going to happen, and we were just talking about this with a client today, is about gifting.
Right.
And gifting for next year, people know that they can gift $13,000 a year without a gift tax return filing requirement, and that's a per person gift. Next year, the COLA adjustment is going to bring it up to $14,000 per person. Okay.
Right.
And the other one I like, which is very positive, is IRA contributions. For the first time in many, many, many years, it's going up. It has been $5,000 for people under 50 and $6,000 for people over 50. Now it's going to go up to $5,500 or $6,500, depending on
that's
age.
good.
Yeah. And the last one I want to talk about is one that's actually quite big. It's the mileage rate for deducting mileage, vehicle mileage. The simple strategy, if you're in business for yourself, is to calculate your business miles throughout the year, and then you can take a per mile, cents per mile rate deduction for each business mile. So this current year, 2012, it's 55.5 cents a mile. 2013 is going up to 56.5 cents. So we're getting a penny per mile.
And it will be the same for the whole year?
Or are
they going to change it?
Not gonna wait.
Okay.
And then the other change in the mileage rate was medical. So when you drive to like hospitals and doctor's appointments, the IRS will now allow 24 cents per mile. And this one hasn't changed, but I still want to bring it up. People forget about this one. A lot of times people volunteer for charitable organizations. You can deduct 14 cents a mile for your driving to charitable meetings, if you're going to do events, things like that. So that's a charity deduction. So that hasn't changed though. So to end this episode, we will keep our clients apprised as we see some concrete settlement on this fiscal cliff negotiation. Up until that time, there's no reason to speculate.
Right.
But today's purpose was to talk about for sure things, no matter what happens with the fiscal cliff. So thank you very much for this episode, and we'll see you next time on Erickson TV. Bye now.
See you next time.